Hi everybody, and in today's video I'm going to be revealing the legendary Warren Buffett's most famous phrase and why it is so important that you heed his advice. Very important for you and your family and your finances, of course. So please make sure you do subscribe to this video so you don't, or this channel I should say, so you don't miss out on all the videos that I'm going to be sending your way over the next few weeks and months, all with this kind of information to make sure that you are going to thrive during the current market. So please go ahead and do that now. Okay, so going back to the video, obviously you must have heard of Warren Buffett, the sage of Omaha, the longest term track record investor and he is an investor, he's not a trader, so long-term investor in the history of investing. He averages around between 19 and 21% and has been doing so for decades. I mean, he has been in the game the longest, he absolutely loves it, and it doesn't look like, he wants to quit at all, although clearly he doesn't need to work anymore. I think he's worth something like 64 billion or something like that. And sometimes he's the richest man in the world, sometimes the second or the third, depending on what the market is doing. Can you imagine waking up one day and going, oh, I've lost $1 billion? I don't think it bothers him that much. But coming back to the quote, look, Warren Buffett has said, and he's very misquoted, because people normally say that Warren Buffett say, diversification is for people who don't know what they're doing. But what he actually said is a wide diversification. So over diversification is only required when investors do not understand what they are doing. So it's a slight difference to what most people say. They say, Warren says diversification. Now, because he wouldn't put all his eggs into one basket, right? He wouldn't do that. He's maybe 4 to 6 different companies at any one time. So he wouldn't put all of his eggs into one basket. But that's very different to other people who kind of say, diversify because you never know what's going to happen. He would say, put several eggs into one basket, but then watch those eggs very carefully. So don't over diversify, right? So he calls it wide diversification. So why is that important for you? Well, especially if you're not a Warren Buffett, okay? And I don't think he was really just talking about himself. I think the average person, should diversify a little bit, but what does that look like? So let me ask you a question. Let's say instead of putting your money into one stock, you put it into 2 different stocks. Okay, so are you diversified right now? 2 different stocks, not the same company, 2 different stocks. Are you diversified? And the answer is probably not. So for example, are those 2 companies totally different companies, or could they be in the same industry? So if they're in the same industry, they're not really that diversified, even though you have invested in 2 companies. Okay, so let's just say that maybe you invest in a company that is, I'm trying to think of an industry like in the banking industry. Okay, so it's one stock. And then there's another stock that's in a totally different industry now. Let's say that it is in the insurance industry. Okay, totally different industry. Are you now diversified, yes or no? So what did I say? Banking industry and insurance industry. Are you diversified? What do you think? Yes or no? Just answer, because we're not here to look cool, we're just here to learn, okay? And the answer is probably no, because both of these are in the same sector, right? They are in the finance sector. So if something happens to the finance sector, so can you see now you're a little bit more diversified this time than just the 2 companies, that is true, but still, is it really that diversified, okay? So can you see how it all depends on what you mean by diversification? So you might consider, for example, getting companies that are in total different industries, for sure, I would say. Different sectors, if possible. But you might also consider diversifying in the sense that you then buy something like in cryptocurrencies. So you'll have stocks, cryptocurrencies, then maybe you might have a position on foreign exchange. Can you see how totally diversified this is? Then you might have a precious metal like gold, silver, palladium, platinum, for example. Then you might have a commodity like oil or copper, something like that. So if you have these 1, 2, 3, 4, 5, can you see 5 totally different, pretty uncorrelated, some of them are a little bit correlated, but uncorrelated types of securities? Can you see that? That's real diversification, okay? Now here's another one, and this is hedging, but hedging is a type of diversification, kind of. But this is hedging. So let me give you an example of this. So within our trading room, we are long, in other words, we've bought Bitcoin for the long term. But in the short term, what does Bitcoin do? It goes up, down, a lot. I mean, a lot. You know, it could have moves of 6%, 7% a day, no problem at all. Could do it several times a day. And in a week, maybe 10 to 15%. So we could be long in one position, but short in the short term. So long term, we're holding, but saying, oh, I think it's going down. So we'll put another position, a second position on short. And that's called hedging. And so that's another way to diversify. Now, I've got a question for you. And I'd like you to comment below if you have the cojones to do that. All right, I'm challenging you here. See whether you can answer this question. I did a video recently on exchange traded funds, ETFs. Now, ETFs, remember, are a basket of shares, okay, that have different securities in them. So, for example, there's an ETF called SPY, you know, like 007, the spy who loved me, you know. I don't know why I thought of that one. But okay, so it has... that is the ETF of the S&P 500, which means it has 500 different companies in it. Okay, are you diversified? Please put your answers below. Yes or no, and if you really want to go for it, say why yes and why no. Okay, so go ahead and do that now. Comment below. Let's see. Come on, don't make this a spectator sport. Really try, because you'll learn a lot more when I give you my answer. Okay, so again, the ETF of the S&P 500, which has in it 500 different companies, and you can just buy into it just once. Are you diversified? Yes or no? Go ahead and comment below. I'm going to give you 5 seconds. 5, 4, 3, 2, and 1. Did you answer? I bet you didn't. Did you answer? Go on, give it a go. All right, let's have some fun. All right, so this ETF, are you diversified? And the answer is kind of. You are diversified because you're diversified over 500 different companies, okay? And those companies are likely to be in varying, you know, might have some pharmaceuticals in there. It's going to have a lot of technology stocks in there for sure. So you're going to be weighted a lot on technology, manufacturing, etc., and so forth. So you are going to be a little bit diversified. But it's all in the stock market. So from that point of view, you're not diversified. It was a bit of a trick question, but no, I didn't mean to trick you. I just thought of the answer now, right? Because you're not really diversified in that sense. And you're long the market as well. So that's the third point. You're long the market and you bought into this, okay? So what if the market goes down? What then? Normally when the market goes down, then everything goes down in the short term. I mean, when the market crashes, as we saw in the coronavirus, for example, everything went down. Even gold and silver went down. Everything, Bitcoin, everything went down, okay? But the degree to which it went down, that was different. So when markets really crashed, like what was it, 26% or so, then, or 27% or so, I think gold and silver only went down something like 13%. So anyway, that doesn't really matter. But the point is, that is what I believe my answer to be. Now, do you agree with that or not? You know, please tell me. Do you think you are diversified? Do you not think you're diversified? I think there's 3 reasons why you are and you aren't diversified, if you like. So it's kind of like that would for me would be just one position. That's just one position. Then I would have other positions in different ETFs and different stocks, and maybe short and maybe a reverse ETF, etc. And some commodities as well. And for sure, digital currencies like Bitcoin, Ethereum, etc. and so forth. Now I know that I am truly diversified and truly hedged, okay? So comment below if you agree or don't agree. I'd love to hear from you if you don't, but above all, make sure that you do subscribe to this channel. Go ahead and do that now, because I'm really going to be giving you a lot of content that you can use immediately to improve your life, that of your family, and your finances for sure. And if you enjoyed this video, then I'd be really grateful if you just hit that like button. Go ahead and hit the like button now. I'd be really grateful if you do that as well. Okay? So remember though, always invest with passion and profit.